I'm your host this morning. My name is Jane Belser, and I'm a senior associate at BFA. So thank you for joining us this morning or your afternoon. Today we're going to talk about building trust with customers through the application of principles in creating trust. It's led by my colleague at BFA, Maylise Carraro. Maylise is a program manager of Catalyst Fund. Catalyst Fund is a philanthropic grant fund that supports early stage inclusive fintech companies in emerging markets. We support them with grant, seed capital, mentorship, and tailored business advisory services. Maylise comes from IFC, where she advised financial institutions in emerging markets on business strategy, digital product development, customer acquisition strategies for underserved and low-income customers. And she previously worked on impact investing for SMEs in Africa and Latin America. She is also the co-founder of Remitmas, a digital remittances service for Latino immigrants in the US. And she also holds an MBA from Columbia Business School and a master's in international affairs from Columbia. And she received her BA cum laude from University College London, where she majored in political science and economics. So as program manager of Catalyst Fund, she's working very much hands-on and directly with the different portfolio companies. At Catalyst Fund, we work with 15 companies so far around the world. And she's here today to talk to you about customer trust creation. So before we go on to that, let me just make sure a couple of the things to keep in mind as we're doing the webinar. We are recording today's session for those attendees that are unable to make it, so just to keep that in mind. And also we encourage you to submit questions over the chat interface, but we'll take the questions at the end of Maylise's presentation. So we encourage you to submit them, and then we'll process through them. So let me pass that on to Maylise.
Thank you, Jane, for the introduction. And hi, everybody. Welcome to our first webinar on our Trust Toolkit. I'm very excited to be with you all today. Before we get started, I actually wanted to make you work a little bit. So we prepared a few questions that we hope you will be willing to answer. So there's going to be a polling appearing on the screen. And with a specific question, and I encourage you to just click on your answer. You should be seeing it now, and then I'll show you the results after you're done with your responses. Yeah, I'll give everybody a minute or so to answer. Great, I see 79% of you have voted. So maybe I'll give a few more minutes for the remaining. All right, this was really to get a sense of who's in the room with us today and what you came to learn from this webinar. So I can see that, for example, we have a lot of entrepreneurs in the room. Actually, 35% of you are entrepreneurs, maybe working actually on fintech products. We have one investor only, several technical assistance providers, and also some other, which I'll be curious to know what that is, but there isn't a follow-up question, unfortunately, for that. And then in terms of what you like to learn, I'm also very pleased to see that the majority actually wants to learn all of the above, so all of the options. So hopefully we'll be able to touch on what the drivers of trust are in digital financial services and explain that a little bit more. And also give examples of how companies are really doing it in the emerging markets specifically, and how you can apply it with your teams if you are an entrepreneur, which many of you are. So here you can see the results in front of you. I always like starting the room with this. So without any further ado, let's get started with the rest of our presentation. So Jane already gave a pretty good introduction of what Catalyst Fund is, so I won't quite repeat that. But an important thing to say is that Catalyst Fund was started with the realization that many early stage startups were not really going past the next stage in their innovation journeys because of two significant gaps. One is lack of talent in emerging markets specifically, and the other was lack of capital. A lot of the innovators that could really promote digital financial services solutions that can work for low-income customers and are tailored to them specifically were just unable to secure the capital they needed from institutional investors, and that really stifled innovation in those markets. So with this in mind, Catalyst Fund was created with the support of the Gates Foundation and JP Morgan Chase, BFA being the manager and also the advisor to all the companies that come through the fund, to solve that problem. So since 2016, we started deploying about $2 million in grant capital and $1 million in tailored advisory services to all of the companies. And the goal is to reach 20 startups really dedicated to serving the low-income customers in emerging markets by the end of this year, the end of 2018. So far, as Jane said, we've got 15 companies in their portfolio across Latin America, India, Africa, and they get selected by a group of very known impact investors in this space: Axion Venture Lab, Omedia Network, Gregos Ventures, Kona Capital, and 500 Startups, with the idea that they need to still prove some of the proof points of their business models and their value propositions to really become investable. And working with the startups, we realized that trust with customers, building trust with customers, was really one of the top barriers for why customers fail to adopt digital financial services. And this lack of trust is often something that can really be a deal breaker for the companies, if obviously acquisition is already hard enough, but in digital financial services, this issue makes it even more complex. So what is exactly trust, and why is it so complicated to really earn it and maintain it over time? And I have to say that the financial services in general are actually quite at a disadvantage. I don't know if you're familiar with the Edelman Trust Barometer, but it's essentially a survey that is sent out every year to measure the trust levels of consumers in different sectors. And financial services is actually the lowest trusted sector. And that is even more true in emerging markets, where often consumers don't trust financial institutions, either because they perceive they offer products that are not for them, or because they think, they've been perhaps scarred in the past by a financial institution, or they just think that they're not there to serve them and serve their needs and their problems and solve their problems. So trust is actually the willingness to be vulnerable to another party, in this case a business or a person. And our propensity to accept vulnerability varies with our perception of the other party. That's even more true in digital financial services, because trust depends also on the existence of risks. And risks in digital financial services are both perceived and real, from both the customer and the provider perspectives. So that makes it really hard to build trust and very easy to destroy it. And trust, needless to say, gives a major competitive edge in general for companies. It's really the fabric of any relationship between companies, between a company and their clients, between company and suppliers, between company and employees. And so it's a determinant of business success. So with that in mind, how can digital financial service providers really engender trust with their customers? So that's the topic of the toolkit that we've developed for our startups. And we started by looking at the customer journey that customers of the various startups have, from acquisition point through activation, and then retention, and finally referral of the product. We've encountered this issue many, many times with all of them. And so we try to understand how could we really identify trust points along this journey, from the moment that customers find the startup or the product and service to the time where they have a great experience with them, and then they come back and then they also tell others. And this is why we developed this framework looking at specific points along this journey where you can either make or break trust. And we've identified 5 main drivers of trust. The first one is appearance. The second is competence. The third is control. And the fourth, transparency. And the fifth, commitment and benevolence. So I'm going to give you examples that are practical examples from our portfolio and also from a body of literature out there on digital financial services for each one of these drivers. Starting with appearance. What do we mean with appearance? Appearance essentially means make an impression. Leave the user with the best impression of the service, something that people want to buy and share with friends. Your ability to leave the users with the best impression, and not only that, but also something that really empowers them. So in practice, from a design standpoint, that means, for example, having a simple and straightforward design. So this is a screenshot here that you see on the screen of a digital financial service provider you might be familiar with. It's called Branch in Kenya. It's a digital credit solution for low-income customers in Kenya. And they made, by decision, the design of their interface extremely simple and adapted to the client base. So they have a rule of one screen, one action, for example, which in user experience and user interface design is often recommended as an easy way for the users to start adopting and using a product. And they use straightforward shapes and colors, varying text size, to really adapt it to the experience of their target users. This year, in fact, or last year actually, to be correct, Amazon identified that their one-click buying option was the one option that was considered a key to success in online shopping. And that's an extremely simple feature. So just to give you an example of how that was out, having a very simple design can be a driver of usage and trust. As opposing, for example, to a solution offered in India, which is Paytm, that has many users, but looks, in terms of it as from a design standpoint, a lot more busy. You don't really know all the options that are present. You actually have to scroll sideways to see them all. And that, for first-time users especially, can be quite difficult to understand. Another way to, by appearance, engender and trust is to keep the language very easy and local. So, for example, Mshwari has a very, very simple menu of options. It's a vertical menu of options. So flattening actually that menu hierarchy is also something that's very helpful from a design standpoint. Or Wave Money also uses, for example, icons to simplify even more the decisions of the users. So from a design, you need to understand what the users will digest more easily, but these are examples of how companies have done it. Another way, for instance, that goes beyond just the design of the interface, because many, as we know, digital financial service providers in emerging markets are not just about the digital solution. They often are offline or have blended approaches of maybe digital, online, and offline. So creating clear and simple collateral also really helps. This is an example from one of our portfolio companies called Mobile Life. It's an insurance company in South Africa. And they, for example, create collateral, making it really simple to understand what the product is about, what the interface even is about in this case, and what the value proposition for the customer truly is. And another thing that actually works beyond the simple collateral in terms of being able to be recognized as a brand that can be trusted is leveraging not only, for instance, your own, the collateral you produce, but other things that are external, third parties. So for instance, obviously the top line would be being promoted on TV or radio, but also having, big billboards in central places is a driver of trust. In fact, Branch is really known for this. Like the day that they had this billboard up in Nairobi, things really started changing in terms of the number of phone calls they received. And, you know, for a new brand, that's something that is perceived well by customers, because it's a signal that now it's probably a brand that they can trust. It's established, it's out there. They have, you know, these big billboards. Obviously, it's an investment, so there's trade-offs to be made, but it's something that really helped them in a specific example. Again, from a design standpoint, here in the interface, you can see that it's extremely simple by design, for example, to refer friends. You can invite contacts immediately from the main menu of the first screen. So thinking of the last step of the customer journey and how you design for that from the beginning, making that simple, that's also a great tip. Making very easy to find, and ideally give also incentives, which again, as an early stage venture can be hard. But it's something that generally works. Refer a friend you trust, also using the language of trust in the referral incentive is quite popular. Moving on to competence. Competence essentially is giving the users proof of your ability. So ensuring that you're able to perform what you've promised with no errors and with consistency, delivering real results. Nothing new here, probably, but how do you actually translate this in terms of designing your business model? So for example, one way is really showing you understand your market really well. So this is, for example, the pricing options of Bima. You might all be familiar with this company. It's also an insurance company that offers pay-as-you-go insurance to calibrate really the time frames and also the coverage and the size of the policy payments to meet the consumer needs in that very moment. So customer, for example, who miss the payments can re-up without penalty. There's a real simple offering there with 3 options. And this product has worked really well because it was designed understanding the cash flows of the users from the beginning. Another example of this is, for example, an insurance company called Pioneer Life that designs similar, very small, they call them sachet insurance. So really adapted to the size that customers might be able to afford, and also to their situations on a day-to-day in terms of cash flows. Showing competence also means having a simple process with no bugs. So making sure that not just the design is simple and beautiful, but also that, for example, at the acquisition step from the very beginning, there's no hiccups, there's no bugs, that the user is able to go through the process and get to successful completion in a few steps, so that you deliver value as quickly as possible. Minimizing time to first value is really important. So that's a way, for example, to ensuring this. It might take some trial and error, some further testing before you go live with a digital financial service product. But it's also really helpful to have that first great experience for a client and make that user friendly. Also, providing evidence of completion at every step is really helpful. Here you see, again, examples from 2 companies, digital financial services, that really use those confirmation messages quite effectively. They say, your cash has been deposited, or your transaction was successful, your payment went through, and having those confirmation messages really appeases the uneasiness of users, especially when they're first-time users again. And it works actually both with positive confirmation and also negative confirmation. So informing them, it's not being completed, and telling them what they should do now to address the issue or go back, or giving them prompts that there may be a step that they missed. So making that design process also very simple. Another one, quite perhaps obvious in regular business, but very difficult in many emerging markets, especially for certain business models, is portfolio companies. And that is a logistics company in Kenya. They're not formally approved, so I can't yet tell their name, but they essentially have a network of agents on motorbikes that bring goods to small entrepreneurs and mom and pop stores that sell, for example, consumer goods of any kind, actually. And what they do is that the first time that a shopkeeper signs on the platform, they tell them they're going to deliver, say, within a window of 2 to 3 hours, but they actually the first time deliver under 1 hour. And that's in order to have a wow effect with the customer. So telling them, you were not probably expecting that this would happen so fast. And that really has contributed to the shopkeeper to say, wow, like I didn't even think this could happen at all. And now, I just ordered like a can of Coke because I was running low. And here you are showing up at my door right after I clicked an hour later. And that wow effect has been really paramount for them. Also, for example, leveraging trust via social circles and personal relationships in communities that, for example, do not have a big mobile penetration or digital usage is just not really embedded in the fabric of society. People interact with one another. Actually, having validation by key members of the community and leveraging those relationships of trusted leaders, for example, in those circles, or even specific individuals that you might mandate to communicate a certain message to the community has worked really well. So a company that we also have in our portfolio, World Cover in Ghana, has really experimented with this concept and found that personal recommendation have probably the biggest influence on the provider's choice from a consumer perspective. If the company is really recommended by someone else in the community, by an individual, that drives even the sense of having a good experience that will then make them more likely to buy a policy. It's another microinsurance company. And having this careful balance actually between online and offline interaction and having higher frequency, for example, of visits has been essential for them. So these touch points made the difference. And now they're able, because they built that up front, to actually reduce the cost of very frequent touch points by individuals by having one representative in the community that, for example, plays voice note messages. So they would, at a specific time, send them a recorded message that the community member would play in front of a group, for example, and that would enable World Cover to stay in touch with the users, but also blending this technological plus a high touch human interaction in their communication model. And that's shown to be quite effective, and the farmers cannot even believe they were coming back and kept engaging in a fun way to really become part of the fabric of their social circles. Another way to use potentially what we had in the paper world, but blending again the digital plus offline, is actually giving proofs that are physical proofs of the service that give this sense of appropriateness. So this is, for example, a woman that just received a microfinance loan, and having the printout essentially of that loan that is hers and she can keep in her home has really generated positive feelings of trust and appropriateness in the company. So some of our startups are also considering this, so giving the option to print out, for example, a policy document if it's insurance, or a loan document at a network. So developing even a network of printers, printing shops around them. And to increase trust, because sometimes even SMS are not always seen as real, or in some markets actually this population is often bombarded with messages, so you start not reading them anymore because it's obviously a common marketing tool. So that can really help. And you'd be surprised actually how much, when we have even a digital tool, you need to create trust, these systems, like having clear act books or meeting minutes, or for example, a printed policy, to recreate that sense of touch, of this is a real product and services and not just something that I don't understand that lives in a cloud. Going to the third one, control. This means giving the user an appropriate sense of control in managing their actions and appropriate tools to do so with the product and service of the startup. So one way to do this, for example, is by giving the users points of confirmation along the journey, like we said earlier, but not just confirmation of a successful transaction, but for example, actions that the user can do that are potential missteps. So giving them, for example, auto checks to minimize the human error that can happen, of course, from the user side, and also minimizing, therefore, frustration from the customer or even complaints that then the company needs to handle. So in the first screen, you see, for instance, when somebody wants to insert a higher amount than they actually have in their mobile money wallet. It's again an example actually from a great study on UX UI design from CGAP that I recommend. There's a message that pops up that says, are you sure you want to send this amount? Your balance is actually much lower. So the user can correct their action. Similarly, Mshwari does this in Kenya, so you can have that chance to confirm again or cancel the transaction. And these messages really engender trust and mitigate fear. Another way to give control is, for example, to provide a transaction history that clients can easily review on their own time, and everything is there. And they, again, can feel they have control over what happens, what they do, and it's transparently stated. Or, for example, giving the users the ability to rate and review. So this is not always easy in many markets where it's not part of the culture. You might all recognize the screenshot from Uber. A simple way, obviously, to rate and communicate feedback is providing either a rating system or just a feedback box with pre-filled fields that users just have to click on. And that obviously gives a sense of control because you can control by giving feedback how, in this case, the product or service or the person you're interacting with will be behaving with you. Lastly, and relatedly to control, transparency means being open and clear about the things that you ask and offer and why. And by that, we mean, for example, when you need to show your pricing information or your pricing structure, you want to make sure that everything is stated very clearly and in a very simple way that doesn't necessarily hide key pieces of information the customers might be looking for. You don't want them to work for critical information to find basic data that generates stress. For instance, in this first screenshot, you see a very clear, simple statement of product features and terms and fees, broken out in different ways. You have the total, you have the principal, the interest, like you can calculate and see each payment's broken down. And you can also go back and look at your long-term details if you want to. So having that clearly stated does generate trust. This is, as you see in the screen now, an example again from one of our companies, a microinsurance company for farmers in Ghana that I was mentioning earlier. And it's not enough sometimes to communicate the pricing or how much, for example, the policy payment was upfront and then what they need to pay, after signing up on a monthly basis. And especially for products that do use technology that can be quite complex. In this case, weather index-based insurance, leveraging weather data to trigger automatic payouts. It's something that farmers were not used to in these communities. And so what they were doing, and what you can see on the screen, is they were tracking exactly what was happening every single day that they had the coverage. So if there was a rainfall or not. So for every day they were measuring that. And if, for example, one village was getting a payout and one other, a few kilometers away from each other, was not, obviously those farmers had been tracking this and they would go back to Will Cover and sometimes dispute the decision. Like, look, I actually did not have any rainfall here. Why did I not get a payout under this insurance policy? So clearly communicating and reminding the customer how the product works, and really intentionally make that almost like the DNA of your marketing MVP, so to speak, has really helped them. Also, obviously, leveraging what I was saying earlier, which is this constant touch points with the communities. Another way of also making sure that the customer perceives you as transparent is sending reminders and warnings to help clients not miss payments, for example, or staying informed. In the case of, this is a case again of digital credit. It's another example from Branch, where they do, for example, send messages way ahead of the due date of the loan, saying your payment is due in 4 days, your payment is due in 2 days, and then your payment is late, and tailor them almost as if it was a friend speaking to the user. So the language is informal, it's more relatable, and after a while of receiving these messages, it does they have seen that increases the chances of customers, for example, repaying their loan and doing so faster than it otherwise would. Commitment and benevolence is the last one of our drivers, and means caring sincerely and committing to do what is right for your customer. So this might seem a little bit abstract, but essentially it means identifying and monitoring and mitigating at all times customer risks like fraud or inadequate handling, for example, of customer data, and really maintaining privacy, confidentiality, and respect. How you can do this, for instance, offering in 24/7 customer service support that's there all the time. That people actually love to chat with a customer service interface. The branch has seen this from the very early days, where people are even asking questions like, "Are you real?" to get a sense of whether there was a real person answering, and making sure that they know exactly when and where to get answers from the first screen. Also, that is a big contributor to trust. And then finally, in a world where there's a lot of data shared over these digital solutions, also making sure that the customer knows that their data is safe and secure contributes to building that trust, and so a sense of protection. For example, here in the first screen, when you sign up, even before logging in and signing up, they say we encrypt your data, we keep it safe and don't share it with anyone. There's a way to also check the terms of use and loan account agreement, again, like to see how the data is being handled and what kind of data has been used for what purposes. So that's, I think, a growing concern for most of our companies, and something that they're really striving to do and communicate effectively with the customers, particularly those that are not yet familiar or even attuned or sensitive to issues of data around data handling. And then finally, from a design standpoint, to really being committed to do well for your customer, it's also making sure that, for example, good behavior is rewarded through product design. So again, here, for instance, if you don't miss payments, you can increase your loan amount in the next loan term. For insurance, in many of the companies, they do the same thing. Like if you've been paying upfront, in the next time you want a bigger, for example, sachet, when it's micro payments, you qualify immediately for a bigger amount or bigger coverage. But now that we've seen all these examples of how these things can practically be integrated into the design, how does the toolkit help the companies identify opportunities for trust creation along the journey? So in order to do this, we created the toolkit that's available online that you might have seen, that really walks you through the process, and you can use with your team or you can use with companies in your portfolios if you're an accelerator or an investor. And looking at all of these drivers and how they play out at each step of the customer journey, again, to identify the trust points that I mentioned earlier. So one thing that we usually start off with is mapping the customer journey with our companies. We draw it out following this AARR framework, as we call it, noting down all the touch points, the questions and actions, the feelings, and the communication tools of the customer at each step. Then we generally split in groups and identify at each step how you can destroy or create trust at each point, using, for example, red and yellow Post-its for trust creation and trust destruction actions. And that allows us to map the universe of trust elements along the journey, as I said, or we call the trust points. So you can use, for example, on the website, you can download this map, this chart that you see on the screen, which is what we call the Design for Trust roadmap, and note down the trust point with your teams. And refer also to our toolkit that is essentially a matrix of what I've just shown you, but in a much more concise way, with a bite-sized explanation, for example, of how each of the driver applies along the steps of the journey. And lastly, the point is to reconvene again as a group, as the teams do often, with the CEOs and the others in the team of our startups, and really think about what are the key actions for trust creation I've identified, and what can I redesign for trust, either at a product level or at an engagement level, if it's an issue more of communication, marketing, and just engaging with the consumers. And then prototyping solutions. So setting up, for example, experiments, you might call them A/B tests or other sorts, but really trying to, with a small sample of customers, understand and monitor the effects of these tweaks, these design tweaks or initiatives that you might want to try to increase trust, and see how it's impacting the core business metrics of the company. So this was the first of a series of toolkits we've actually developed to support our startups, and we hope actually that they can be used for many other startup innovators in emerging markets. As you saw, all the examples are actually tailored all the time to emerging market context with additional challenges that come with operating in these environments. This was the first one. We're developing also one around risks. So it's a diagnostic to determine critical risks areas in both internal and external for the startups. And finally, also one on how to reach product market fit. So a series of tools and frameworks to help startups get to that point, which is often hard when you're joining a program like Catalyst, and you're definitely sometimes, pre-product, definitely pre-product market fit. So before I conclude and giving you a bit of our marketing spiels where you can find all these resources, let's take some of the questions.
Great, thanks, Miley. So we encouraged all the attendees to send over questions over the chat interface. You should be able to access that from, I believe, the bottom of your window. You just click on that and send the questions away. And while we're waiting for those to come in, Miley, I think we were also wanting to poll an interest in future webinars as well.
That's right, but we can do that maybe at the very end after the questions.
Okay, so while we wait for some more questions to come through, I have a question for you regarding how do companies assess the level of trust with their current customers? What have you seen?
That is very much an iterative process. So many of them actually do a lot of problem solution fit interviews, for example. So they engage a lot at the very beginning as they're building the solution they're trying to push in the market, trying to understand the pains and gains of the customers, and then going back and asking for feedback on the product, doing a lot of user testing with the products themselves. Basically actually being, day in, day out with their early customers. And that's how they can understand where the trust issues might be. And then when they're a bit more advanced, they actually do these tests I was mentioning. So is there something that is leading, for example, to a big increase in user engagement or in uptake of the product? And what was that change? Was that directed at increasing trust, for instance? And oftentimes, they have intuition that is quite good in these situations. So, but it's definitely being close to the clients and having this iterative process in product design.
Great, thank you. We have a question from Lizzie in the audience, and she's asking, do you have any examples of companies who have lost trust but were not actually a scam?
Yes, we do. Actually, many of them face these challenges, even if it's over small things. For example, we're working with a company that's providing pay-as-you-go gastos in Kenya. So again, a way for clients to not bear the cost of the big upfront gas cylinder, but paying little by little. And they have a smart meter that allows to check and monitor the consumption on that smart meter. So they can send, for example, messages to the clients that they left their gas on, or that they're running low on gas. But at the beginning, one of the major concerns was related to fires, because obviously the cylinders in the slums of Nairobi can explode. And so what they did initially was giving out fire extinguishers to every client, and because that had happened, and they had to run to the customer home, and luckily nothing bad happened. But if something like that were to happen, it would have been really bad in terms of obviously other in the community trusting to having their product in their home. So providing the fire extinguishers for a while helped, and then they developed these messaging systems to really track and monitor the level of gas, if they were running low, if there were leakages. So they even improved the product itself to to be able to prevent these issues that would destroy trust. And that's just one example. I can think of others. For instance, the company in South Africa I was mentioning, microinsurance, they initially designed their product with a color set and a logo that was very, very similar to one of the major telcos in the country. And that actually contributed to customers not trusting them, and their messaging was unclear. So they were saying, well, you're so similar to this company, but you're a different company. But we don't recognize you're a new brand. Your message, I'm not understanding what you mean when you say, you're offering mobile, simple insurance. And because again, the words that we're using were too similar to what a telco would use. And again, that led to changes in the marketing materials, changes in their tagline, and they went to fraud. So it's really small things sometimes that can destroy trust.
Great, thanks, Miley. To follow up on that question, is there an area you see among the principles where once you've lost trust with your customers or you've eroded trust, where you would start first?
Where you would start first in terms of designing a solution?
About the principles that you would apply. Do you see, is it more important to look to demonstrating competence? Is it more important to demonstrate transparency? Have you seen
well, that depends really on what the product and service is, like what the solution actually is and why you lost the trust. So if it's an issue that, your pricing wasn't clearly stated, or it looks completely fraudulent in the market, or, usurious, then clearly you have to do something around that and communicating pricing better. So it's not that one driver is better than the other. They all happen, as almost as a circle. Like they're interlinked, they enhance each other, and it's not you can really prioritize in absolute. You prioritize based on what the problem in terms of trust destruction was. So it really is depending on that. But I think it does provide an overview of what are the concepts or the principles that I can apply to solve a problem when I see it arise in terms of trust creation.
Okay. In terms of questions, we also have just coming in. I'm not sure, this was anonymous. So do you have any examples of best practices in building trust when expanding operations to a new city? Any startups that you've worked with that face those issues and how they solve them?
Yes. Our company specifically are early, so not many, actually probably only one, are thinking about scaling and expanding to other regions. But we have seen this through other work that we're doing. And so one way, for example, one of the companies we worked with was approaching this, was actually trying to, before entering a new market, building relationships with key supporters. So people in that community that would be either your early adopters or just people that would convey your messages and they were influential. So obviously that's difficult to do, but identifying that key influential person in the market or city that you're entering and how they can help you is really helpful, because they also understand, for example, if there's political dynamics at play or regulatory frameworks to go to manage, or respect, for example, the people to know, the people to talk to. So doing that little bit of advanced homework has really helped them. And also understanding, obviously, what other market players there are before entering, how they're positioning themselves, tweaking the message accordingly, based on what, for example, those key informants and influencers are telling you about the markets. But then after that, it's a little bit of trial and error.
Great, thank you. Next question from Juan Camilo. He's asking, can a content creation strategy help create trust?
A content creation strategy, yes, definitely. If it is thought out and very relevant to your user base. So in fact, again, this company in Ghana that we're working with was asking all the farmers, for example, what else would you need from us? Is it just again, this is a company that does not have a lot of digital elements. It's very actually offline. So how could they provide content and information that could increase the touch points with customers also because they don't have many in the regular flow of their product, because insurance, the benefits of insurance obviously are perceived only if you're unlucky and something happens, for example, to your farm, and so you need a payout. So what they did was asking them what you need, and all the farmers were said, we need information, and we need, for example, contacts with tractors. So to solve those two problems, they developed, for example, WhatsApp groups in the community, what they called the wool cover networks. And that was a way to establish connections with other farmers in the communities where they could exchange advice and tips, for example, on various issues that they were facing with their farms. And also through what I was saying earlier, so through the key informant in the communities, they would not just send messages or reminders about the product or marketing about themselves, but rather information that was helpful to them. So information about agricultural inputs, information about rainfall, how to measure that, things that were really relevant for the users. So that's a way, for example, to do it in a very offline rural areas, for example, in emerging markets. But other people have done this digitally. So Destacame, for example, our first company in Chile and Mexico, built essentially their entire customer acquisition via Facebook. And they were doing that also by providing a lot of content that was not necessarily related to, for example, credit score. They are an alternative credit scoring company, but other things that were helpful for people to manage their financial health. So they helped them pick, for example, what the credit they needed, what was right for them. They developed this comparator of offering in the market, so other kind of content and information that can be helpful to your users.
Right. At the moment, we don't have any other questions over the chat or Q&A interface. If you do want to submit more questions, you can using either of the two features. I was referring to, I should have called it a Q&A. So you're welcome to submit further questions. Mylis, if you want to take a chance to poll the audience in terms of upcoming webinars, that now would be a good time.
Yeah, absolutely. So as I mentioned, this is just the first of a series, and we want to know what else would you like to hear from us about. So please take a moment to answer these two questions.
Okay, we have a 75% of the audience answering, so we'll just give it a few more seconds.
And I see many people are dropping off, so just want to take the chance to thank you all, and make sure you check out our toolkit contents on cftoolkits.org, our website where we gather all of these materials. And feel free to reach out anytime with questions or requests for more content like this.
Okay. Could we skip to the last slide?
Mm-hmm.
So we just want to thank everyone for joining us today. For more information, as we mentioned before, you can test drive the toolkits at cftoolkit.org. Also register to attend our upcoming webinars on the Catalyst Fund page. And we also encourage you to visit our content. We have several posts about trust creation and different ways we've seen them applied in our portfolio companies. And also a post on trust and some of the other tools that fintech practitioners need with respect to the Toolkit series. So thank you so much for attending, and thank you to Myelise for the presentation today. We'll be sending a follow-up email with the recording and these links for your reference, and I hope you have a good rest of your day or evening. Thank you so much.
Thank you, everyone.